Imagine two friends who both earn the same salary. Every month, the first friend puts money into a savings account, while the second friend invests money into stocks, index funds, and other assets. 10 years later, both have been disciplined with their money. But when they compare their financial situations, one person has significantly more wealth than the other. Why does this happen? The answer lies in understanding the difference between saving and investing. Both are important, both have advantages, and both play a role in building financial security. However, they serve very different purposes. Saving is the process of setting money aside for future use while keeping it relatively safe and accessible. Most people save money in bank accounts, emergency funds, or other low-risk financial products. The primary goal of saving is protection rather than growth. When you save money, you are preparing for unexpected expenses,
late at night.
emergencies,
The stock market has
short-term
closed,
goals,
but
and
investors
financial
around the
stability.
world are still searching for
Savings
answers.
provide peace of
Some are
mind
looking
because
for
the
the
money
next
is
Nvidia.
generally available
Others
when
are
you
trying
need
to
it.
decide whether to
Whether
buy,
it's a medical
hold,
emergency,
or sell their favorite
car
stocks.
repair, job
Traditionally,
loss, or unexpected
investors
bill,
turn to financial
savings
advisors,
can help prevent
Wall
financial
Street analysts,
stress.
and investment
Investing,
research firms.
on the other hand,
But today,
involves
a new
putting
player
money
has
into
entered the
assets
game:
that have the
artificial
potential to grow
intelligence.
over time.
AI is changing almost
These
every
assets may
industry,
include
and
stocks,
finance is
bonds,
no exception.
real estate, mutual
Millions
funds,
of people now use
exchange-traded
AI
funds,
tools
or
to
businesses.
summarize earnings reports,
Unlike saving,
analyze
investing
company
involves
fundamentals,
risk.
compare
The
businesses,
value of investments
and even
can rise
generate
and
investment
fall,
ideas.
and there are no guarantees of
Two of the most
profit.
popular AI
However,
systems in the
investing
world
offers
today
something
are
savings typically
ChatGPT
cannot:
and Claude.
the opportunity for
Both are
long-term
powerful
wealth
language
creation.
models capable of
Investors
processing
accept
large
short-term
amounts of
uncertainty
information
in exchange
and
for the
presenting it in a
possibility
way
of
that is
higher
easy to
returns over many
understand.
years.
But when it
One of
comes
the
to
biggest
stock
differences
analysis,
between
which
saving
one
and
performs
investing
better?
is the
This
impact
question
of
is becoming
inflation.
increasingly important
Inflation
because
refers to the
retail
gradual
investors are
increase
looking
in
for
prices
tools
over
that can help
time.
them make smarter
As inflation
decisions.
rises,
The promise
the
of
purchasing
AI
power
is
of money
exciting.
decreases.
Imagine being
This
able
means
to
that the
ask
same amount
complex
of money
investing
buys
questions
fewer goods
and
and
receive
services in
detailed
the future.
explanations in seconds.
If your money sits in a
Imagine
low-interest
comparing
savings
companies,
account while
understanding
inflation rises
risks,
faster
and
than your
reviewing
savings
financial
grow,
statements
your
without
purchasing
spending
power may
hours
actually
reading
decline.
reports. That
This
is
is one
exactly
reason why
AI
many
has
financial
become such a
experts
hot topic
encourage
among
long-term
investors.
investing as
However,
part of a
there is a major
wealth-building
difference
strategy.
between using
Another
AI as a
important
research
concept
assistant
is
and using
compound growth.
AI as an investment
Albert
advisor.
Einstein is often credited
AI
with
can help
calling
organize
compound
information,
interest one of the
explain
most powerful
concepts, and
forces
highlight
in
potential
finance.
risks, but
Whether
it
or
cannot
not he
predict
actually
the
said
future.
it, the concept
Markets are
remains
influenced by
incredibly
economic
important.
conditions, interest
Compound
rates,
growth occurs
consumer
when earnings
behavior,
generate additional
competition,
earnings
government
over time.
regulations, and unexpected
Investors who
events.
start early often
Even
benefit
professional
the most because
analysts
their
with decades
investments
of
have more
experience
time to
make
grow.
mistakes.
Small
Therefore,
amounts invested
the goal of this
consistently
video
over
is not to
decades
determine which
can
AI
potentially
can
grow
predict
into
stock
substantial
prices.
sums.
Instead,
Time is
we
often
want
one
to
of the
find out
greatest
which AI
advantages an
provides better
investor can
analysis,
have.
clearer
Risk is
reasoning,
another major
and more
distinction
useful
between
insights.
saving and investing.
To make this comparison
Savings
fair,
accounts
we
are
will
generally
imagine that both
considered low risk
ChatGPT
because
and
the
Claude are
value of your
given the
money
exact
remains
same
relatively
challenge.
stable.
We ask them to
Investments,
analyze a
however,
company that
can
investors know
experience
well.
volatility.
We request
Stock
information
markets
about
rise
revenue
and fall.
growth,
Economic
profitability,
conditions change.
competitive advantages,
Companies succeed
risks,
and fail.
future opportunities,
Investors must
and
be
overall
comfortable with
investment
temporary
considerations.
fluctuations in value.
Then we compare how
While
each
these
AI
fluctuations can
responds.
feel uncomfortable,
The first thing many
long-term
investors notice
investors
when using
often
AI
focus
is
on
the
years
quality
and
of
decades
explanations.
rather than days and
Financial
weeks.
reports can
Many
be
people
difficult to
mistakenly
understand.
believe they must
Terms
choose
such
between
as operating
saving and
margin,
investing.
free cash flow,
In reality,
earnings per
successful
share,
financial
and
planning
return on
often
equity
involves
often
both.
confuse beginners.
Savings provide
A
security
useful
and
AI
flexibility,
should be able to take
while
complex
investments
financial
provide growth
information
potential.
and explain it in
A
simple
strong
language.
financial foundation
This
usually
is one of the most
begins with an
valuable
emergency
benefits of
fund.
artificial intelligence.
Once that foundation
Instead
is
of spending
established,
hours trying to
investing
understand
can help
technical
individuals
financial
pursue long-term
terminology,
goals such
users
as
can ask
retirement,
direct
home
questions,
ownership,
and receive
education
understandable
funding,
answers.
or financial
When comparing
independence.
ChatGPT
Financial
and Claude,
goals also
one
influence
important
whether
category is
saving or
clarity.
investing makes more
Investors
sense.
need information that is
Money
organized
needed
and
within the
easy
next
to
few
follow.
months or years is
Long
often better
paragraphs
suited
filled
for
with technical
savings
jargon
because
may sound
preserving
impressive,
capital is more
but they are not
important than
always
pursuing
helpful.
growth.
The best analysis
Long-term
often
goals
comes from
that are
presenting
many years away
information in
may
a
benefit
structured way.
more from investing,
For example,
because there is
breaking
more
analysis
time to
into
recover
strengths,
from market
weaknesses,
fluctuations,
opportunities,
and
and
potentially
risks
benefit
allows
from
investors to
compound
understand
growth.
a company more
Technology
quickly.
has made
Another
investing
important
more
factor is
accessible
depth.
than ever before.
Some AI systems provide
Today,
short
individuals
summaries,
can open
while others
investment
provide
accounts from their
detailed
smartphones,
explanations.
purchase
Investors
diversified
often
funds,
want more than a
and learn
simple
about
overview.
financial markets through
They
educational
want to know why
content.
revenue is growing,
This increased
what competitive
accessibility has
threats
encouraged
exist,
more
how
people to
economic
participate in in
decisions may
investing
affect
and take
future
greater
performance,
control of their
and
financial
whether management
futures.
is executing
Ultimately,
effectively.
saving and
The
investing
ability
are
to
not
provide deeper
competitors.
analysis
They are
can make a
partners.
significant difference.
Savings help protect
Risk
you from
analysis
financial
is another
emergencies
area where
and
AI
provide
can be
short-term
useful.
stability.
Many investors focus
Investing
heavily
helps
on
build
potential
long-term wealth
gains
and
while
fight the
ignoring
effects of
possible
inflation.
downsides.
Understanding how to balance
Experienced
both can be one of
investors
the most
understand that
important
risk
financial
management
skills
is just
a
as
person
important as
develops.
identifying
The
opportunities.
goal is not simply to
A strong
accumulate
analysis
money,
should
but to
discuss not
create a
only what could
financial
go right,
strategy that
but also
supports
what
both
could go
security
wrong.
today and
This includes
opportunity tomorrow.
competition,
The
changing
people who achieve
regulations,
long-term
economic
financial
slowdowns,
success are
supply
often
chain
those who
challenges,
understand
and
when to
valuation
save,
concerns.
when to invest,
One of the
and
reasons
how to use
AI
both
has
tools
gained
effectively
popularity
over
is
time.
speed. In the past, researching a company could take